Morning, Steve. Here in Chicago, it's March 9th. The USDA had their monthly U.S. and world supply and demand. Not a lot of changes in the market. They kept the corn carryout unchanged and wheat carryout here in the United States unchanged. They did raise the soybean carryout 10 million bushels due to lower crush. This due to lower domestic meal demand and lower soybean oil exports. They did drop a little bit world corn, wheat, and soybean carryouts, kept the Argentina and Brazil soybean crops unchanged, and raised soybean imports to China at 82 million tons. We have attached a chart that shows the monthly canola futures chart in Winnipeg. And as you can see, we've had a pretty big sell-off since January. That's kind of in step with all commodity prices dropping because of concern about world economic conditions. We also saw a pretty steep drop in crude oil due to too much global production. Recently, we've seen canola futures drop because of a China import policy that could change the dockage limits for canola imports. And right now, they are unloading open sales on the old policy, but the new policy could back up exports into Canada. It could shift the demand to more crush than export and could allow the canola oil and canola meal to compete with soybean oil in the United States for demand. The high oleic Nexra seed canola variety should see a large premium to the other seeds this year because of the positive impact it has on the oil content and quality, and that should go in and compete with the United States. We did talk to our weatherman this morning, and he talked about how Western Canada, especially Alberta and Western Saskatchewan, is going to be dry this spring. He thought the eastern part of the western prairies would do okay because of adequate soil moistures. Alberta is also going to be warmer than normal. He then thought that we could see a gradual change starting maybe in June to more normal weather for all of the Canadian prairies in July and August. And that's one thing that we have to be watching in the United States too, because we're sitting here in a sideways trading action waiting for the weather. And obviously if we had good weather, we go down. If we have bad weather, we go up. And so for the next, let's say 30 days, we'll probably be trading sideways, waiting for the weather to unfold and waiting for the market to move the direction it needs to go. One reminder though is that the funds, the managed funds that follow the momentum of the marketplace, are near record short corn, beans, and wheat. And that's kind of a vulnerable position going into the unknown of the weather year. So again, prices are a little bit lower after the report. I think we're going to chop around for the next 30 days until we start trading weather. These are my thoughts and not those of ADM or ADM Investor Services. And if you have any questions on this canola seed, please contact your ADM contact in Canada. And have a safe and profitable trading day.